So let's start.
Yeah.
Okay. So I welcome you all to the 21st CITIC CLSA Forum. In this meeting, we have Mr. Sanjay Mundra, who's the president of Investor Relations at Shriram Transport. So what we'll do is, sir, would you like to sort of start with a brief introduction and then like a 5-10 minute, and then we can jump straight to investor questions?
I think if I'm not wrong, there are right now around 3 investors what I look at right now.
Yes. There are a few missing people. We'll just reach out to them as well.
Yeah, so there are roughly around 3 investors, and Krishnendu has been meeting me for long, and now Nilesh has also joined.
Sure.
Feel that we can go straight away to the Q&A, because there are less investors, or otherwise you feel I can give some introduction for a couple of minutes.
Sure, I think we can then, if you feel that we should jump straight to questions, we can do that.
Just comfortable, otherwise I can go through some of the things,
Okay, sure. And just for the participants, please refrain from asking questions on the merger. I don't think those will be answered. So, and also as per the SEBI guidelines, this meeting is also getting recorded. So just those two pieces from us. So participants who wish to ask questions, please unmute your line and go ahead with your questions. Just straight unmute and go ahead. That should be okay. Thank you.
Hello, sir. Good morning. Anand here from White Oak. Yes, I just wish to understand, there's been a hefty cut in diesel prices pre-Diwali. This should be music to your ears, at least for your set of customers. There would be more cash flows to them now, and hopefully for a while until the rates correct. So does that change your expectation in terms of credit quality performance, the hefty cut in diesel prices?
Say, to be very, very honest, Anand, being in the industry, particularly the commercial vehicle finance for last 28 years, I can only tell you that this is just, for the temporary period, people need to adjust whether they gain if the prices comes down, or whether they lose if the prices goes up. And this is just for the temporary period. I'm talking about 27, 28 years back when the diesel price was 8-9 rupees, or 10 rupees. And today it went up more than 100 rupees, You and me need to bear the entire cost, for the diesels. And today, if you look at, since the diesel got deregulated, if you look at earlier, every week the rate used to get fixed. Now it's on the daily basis, and for the small truck owner, for our customers, as a midnight, the freight get adjusted. For fleet operator, they have the escalation clause, every 7 days or 15 days, based on the diesel prices, the freight rate also keeps on moving up, And particularly if I look at since March 2020, which is almost 18 to 20 months or so, the prices of the diesel prices has gone up almost by 25%. But if you look at the freight rate has also moved up by 25 to 30%, whereas diesel component, the fuel cost components remains 50-55% of their cost. So ideally, if you look at if the freight rate, if the fuel cost moves up by 1%, ideally freight rate should move up by 50-55 basis point. This is what we always feel that. But the important thing is not the trucker who get the entire benefit. I think it's the consumer who gets the entire benefit. Ultimately, we has to bear the entire thing, whether there is a increase or whether there is a decrease, is the consumer pocket, which get impacted through the vegetable, fruits, and all those pricings. But definitely coming down is slightly the added advantage to the customer, because the logistic cost in India has gone up significantly higher, in last 18-20 months or so, which is not good for the economy as a whole, So diesel prices coming down is going to give enormous benefit to the economy as a whole.
Great. And sir, on that RBI norms for change in for stage 3 moving to so there, if you can give us color as to how things will change for us.
Right. See, for us, we have been following this prudent, for many years, And if you look at for Shriram Transport, I can tell you from stage 3 or the 90 days DPD, whatever you say, things, we only take out those cases, where the entire DPD is cleared. That means he has to repay the entire principal or interest portion for the entire DPD. That means for 3 months. 90 days generally are the 3 months EMI. Then only we upgrade, we take out those cases from the NPA or the stage 3. So if you look at our movements, the movements only happens from stage 3 to stage 1. It doesn't go to stage 2. That we have been following for long. That's one part. Number 2, since it came on Friday, so Saturday, Sunday, there was a lot of calls from the investor, the analyst community, and there were a lot of things, what we able to generate, gathered from the call, that a lot of people do the stage 3 calculation only at the quarter end, but like to share that we do on the monthly basis, Yes. So I think the impact for that will never be there as far as the calculation is concerned. Yes, little bit hiccup can be here and there because we do monthly calculation where the RBI has said in the daily calculations, So, but I think we are representing this week to the RBI very, very hard because for the truck operator, owner, driver, suppose his EMI is on 10th of, he comes and pays on 11th, 12th, and suppose he is 60 days overdue. So that will be a little bit harsh on the customer, because like the vehicle is mobile in nature, somewhere he can stuck or something, So what this customer says, sir, I am paying you every month, rather than, particularly the due date and etc. So there could be a little bit hiccup because of that. Otherwise, we don't see, there is any issues as far as, for basically complying with the regulations. As far as the provision on this, I don't think so. Provision will have a big impact, because of that. People can read because they have been following for long. This does not mean there will be increase in the credit cost. Yes, people can reduce the coverage and etc. Since we don't have any much impact. So for us, I don't think so. Making extra provision or maintaining the provisions will be things. And definitely, since we are representing, at the same time, we have asked our IT people, to generate, what could be the impact. But as of now, it seems to be very, very minor impact, what we can tell you. Then the second questions, comes, as if you look at the reporting part, what we do in the annual report, because, once I clarified that, then a lot of people have seen the annual report and they said that, sir, your upgradations are happening from stage 3 to stage 2 also. I said, no, this is not the case, we do upgradation only for stage 3 to stage 1. But suppose, for example, in the month of May, that guy is, 90 days DPD. Then in the month of June, he comes and repays the entire money. So he come down to stage 1. And suppose after 6 months, again, he delays the EMI by 2 months. So he comes under stage 2. So what happened when you do the reporting, for the movement of NP analysis for the entire year? What happens is that from stage 3, it goes to stage 1, then stage 1 to stage 2. Then what happened? A lot of duplication. You will see the amount of movement will be very, very huge. So what we report in the annual report as far as the movement of NPA is concerned, what was the NPA as on 31st March and what is the NPA on next year 31st March, the cases. And based on that, we derive the movement. I think 1 year 2019 or 2020, if you look at the movement of NPA was very, very large because we followed that quarterly norms or monthly norms, based on that. And suddenly people get surprised, 50% of your portfolios are moving here and there, but that's never been the case. But within the year, because of the owner driver segment, the cases keeps on moving here and there. So this is just one clarification I want to highlight.
Thank you, sir. I'll come back in the queue.
I think someone has raised the hand. Can you just...
Yeah, Siswan, do you want to go ahead? Unmute and go ahead, yeah.
Yeah, hey, thanks so much for doing this. Just want to, check and hope you can share some outlook on the NIM front. How do we see about the second half? What kind of increase are we expecting? And also, would be appreciated if you can share about the NIM outlook for 2023 as well, and where are we aiming to go to?
So I'll just break down your question. The first question you asked about the NIMs, and the second question, what it was?
It's NIM as well. First one is more like what's the NIM for the second half? What kind of increase are we expecting? And also, next year, what kind of NIM increase are we expecting? Yeah.
Second one, and just
is FY23 NIM expectation.
Same NIM.
Also.
Okay.
Yeah.
Okay. As you know, our track record, we have always maintained around 7.5% kind of net interest margin on the minimum side. And if you look at last 4 to 5 quarters, the NIMs have been hovering around 6.5%, near about. I'm just explaining, And the main reason for the NIM hovering around is the extra liquidity what we are carrying on the balance sheet, So today, if you look at, we are carrying almost 2.5 times more liquidity than what we used to carry. Because of the COVID situation, we increased the cash balance. And carrying cash always has a negative impact on the. So we are losing roughly 45 to 50 basis point, on that. And if you have heard the conference call, which when we came out with the Q2 number, 18, 19 days back, we have said that. By the December, January, we instead of maintaining 6 months of liability, we'll come down to 5 months of liability. And by March, we will come down to 4 months of liability. That means there will be a reduction in the liquidity, what we are carrying on the balance sheet. So it will have a positive impact on the net interest margin. That's one part. The second part, the incremental cost of funds, for last 6 to 9 months has dramatically come down for us. And as the earlier liability will get replaced by the incremental lower cost liability, the cost of funds are also likely to come down. And if you recollect, when we came out with the annual results last year, we had said that, probably this year we will have 7% or very, very close to 7% kind of net interest margin. But suddenly you got hit by the COVID-2 wave, as a surprise. And we all know the severity of the COVID-2 was huge because of the rural economy getting impact, oxygen shortage, the impact was very, very severe, on the things. So I think everything got delayed by around 2-3 quarters. Now we feel that probably by June quarter, we may come down, we may go up to around 7%. But in the sense coming specific to your question, I think every quarter you will see 10 to 15 basis point increase in the net interest margin, either by the lower cost of funds or reducing the liquidity. So next 2 quarters, we expect around 20-25 basis point minimum there will be increase in the net interest margin. And FY23, definitely we are looking at around 7, in between 7.5% kind of net interest margin.
Okay, thanks so much. And on ROE basis, any medium-term target or any color on how should we think about ROE in FY23?
So definitely, we have always said that there is a further scope to increase the ROE. And I'll tell you there are 2 components what we are targeting. First, we are expecting around around 50 basis point increase in the net interest margin, 50-55 basis point. and we are expecting around 25-30% minimum decline in the credit cost. So post-tax, so that comes to nearly around 80 basis point. So we expect post-cost minimum the ROA should go up by 50-55 basis point. So we see ultimately we have to get into 2.7 to 3% kind of ROA. And if we leverage 5.5 times, and suppose if the COVID is out of this world, then probably we can leverage more. Ultimately, we have to get back to 16 to 18% ROE. But this year, it seems to be tough. I think probably we'll end up around 14-15% range. But probably next year, definitely we are looking at around 16 to 18% kind of ROE.
Got it. 14 to 15% this year, and FY23, we're targeting 16, 18.
Yes.
Got it. Thanks so much.
Participants can just unmute and go ahead. Najman, go ahead, please. Unmute and go ahead.
Hello, hi. Thanks for the opportunity. Can I ask on the topic that you mentioned earlier with regard to some change in the stage 3 upgradation and whatnot? Could you put it into context on the credit cost guidance? Is it still at 2.4%? I think that was the current guidance.
Okay. See, if you look at last year, when I'm talking about FY21, the total credit cost was roughly around 2.5% for us. And we thought probably this year will come down to 2%. But because of the second wave of COVID, which came in the month of April, May, and the impact was felt till June or 15th of July. And suddenly what happened was there was a bucket moment because these were the issues, some of this, whether we do the restructuring for some of the stress segment, or we allow the flow from stage 1 to stage 2 or stage 2 to stage 3. So we took the later stages, and we didn't reduce the LGD part. In fact, we increased the LGD part. So in the first quarter, we made ad hoc provisions, and a little bit of COVID provisions also, because at that time everybody was talking about COVID-3 and etc. So at that time we were not very, very sure, so we made those provisions, So I think 2% kind of credit cost to what we are looking now. If there is no third wave of COVID, then this last quarter, if you look at, we came down to 1.92. I think 2% should be for the remaining quarter. But since we have made up huge provisions and COVID provision in quarter 1, so this year, definitely it will be slightly above than 2, but we feel it will be lower than 2.5. And then for next year, I think definitely we are looking at 2% or could be slightly lower. But on an average, you will always keep 2% credit cost, for Shriram Transport.
Thank you. Yeah, that's very clear. And on the separate side of the AUM or loan growth guidance, could you remind me what the guidance again, and what would be the key driver? Yeah.
We stick to our guidance, what we have guided about, double-digit kind of growth now. Whether the double-digit remain at 10-11% or it goes to 12-13%, these are something very, very difficult to predict in this volatile world. But I think double-digit is the one thing, which is doable in spite of getting second wave of COVID impact. We didn't revise our growth guidance. So we are looking at the double-digit kind of growth. And that will be led by the used commercial vehicle. There's absolutely no doubt about it, because we feel that use is our strength, use is our bread butter, and that will continue to.
And so far, have you seen change of mix? I think from our interaction in the past, 75% come from the existing customers. Have you seen that changing, or is still roughly about the same?
Right now, we have been slightly reluctant in acquiring new customer in last 2-3 years.
Okay.
We didn't go on aggressive with the growth plan. And if you recollect, in 2018, when all these NBFC crisis came into the picture, we reduced the LTV by 4 to 6%. Still, we have not increased that. We have to be doubly sure on basically the COVID side now. It's not much because economic growth, I think, is quite reasonable. I think the 4 parameter what we look at, out of that, the 3 parameters are doing very well, which is one is the infrastructure, export related, real estate, and I think only little bit of consumption demand, domestic, I'm not talking about the international. Little bit, there is because if you look at most of the FMCG companies have reported 4-5% kind of volume growth, which we feel, as the people get confidence about the COVID and etc., I think the spending will increase over the time. It won't go immediately, but it go over the time. So I think all the engines then thereafter on the growth should be fired up, and definitely we are looking at a much better growth.
But just to confirm, on LTV side, there's no change, right? About 60 to 65% from my understanding.
Pardon?
From the loan to value.
No, right. See,
formulation has not changed. Yeah.
No, we can increase from 60-65% can go to 65-70%. That can happen. But for that, we are just waiting for some time. I think once we are sure on the economic side, I think we will increase it.
Okay. And I understand we cannot ask a question on the merger, but can I confirm what the stake for the Automall side now? What is the stake at the Shriram Automall side? Is it still
Automall
42%?
Yeah, around 41-42%.
Okay. I mean, reason I ask because car trade seems to be driving the decision, or what they hinted they want to drive more decision. Have there been change of stake?
Not
to confirm, yeah.
See, if you look at what we did, we had the fiscal infrastructure, and car trade has that the other online, the auctions, and all the 3 got merged, and we handed over more than 50% to the car trade, and the balance 70% got. It was an employee ESOP what we have given, for the Automall things, And to the listed one, I'm not very sure, but I can tell you we have 42% in the Automall. But what percentage of that valuations is there in the car trade, I am not sure. I think you guys know very well what is the share of that, and within that you can calculate 42% of the mark equity is held by us.
Got it. Thank you. I'll pass back to the group. Thank you.
I think Krishnendu has raised the hand. Krishnendu, I'm not sure if you have any question.
Yes,
sir. Yeah, sir. Thank you again. Sir, continuation to yesterday's, just trying to understand, sir, we have not increased the rural presence on the branch side for quite some time. So, what is the situation we are looking at? Are trying to increase a very small clarification about this, and the employees also we have not increased. So to grow the assets, so these are basics. Very small question with basics. And one more question, sir, on the COVID probation, which you have 28.
Let's complete this and then we will take it. Okay. Now on the employees, we know we have around 25,000 people, but one of the state, because of the Minimum Wages Act, we have more people, but that's not been counted in the employees what we report, because that's apprenticeship, we have kept under that. And after 1 year, if that remains, so we will we will board them in the employees rather than, directly put, because of the Minimum Wages Act by the various state governments. So the number of employees what is being reported is much higher for us. It could be okay. Right now I don't have the number, but I think that's one. The second part, about little bit expansion, on the rural side, that's been happening. If you look at 5 years back, 5 or 6 years back, we came out with the rural centers, whereby we open our rural centers. And with reaching a particular scale, we convert that rural center into the branches. So if you look at last 5-6 years, so whatever the rural center, whatever the increase in the number of branches has happened, I would say 98-99% happened through the conversion of rural centers into the branches. And this is a cost effective, because if you have 200-300 customer, you convert that. And then further, if you look at the prospect to increase the business is that we convert that rural center into the branches. So before a branch is open, it's become a profit center. This is how we have scaled. So last 5-6 years, whatever the number of branches has got increased only by converting the rural centers. Now today, if you look at, we have roughly around more than 800 rural centers still is there. And we feel that 60-65% of these rural centers in next 3 to 5 years will get converted into the branches. And most of these rural centers are in the rural side of it. So that's how we plan to go big in the rural economy.
Sure. Thanks. Yeah, I do see it has been flattish. I was just looking at the rural, but if I look at the branches plus rural, it has been increasing for the last 2 years, even during COVID. So yeah.
How it's very, very difficult to open a branch.
Yeah. Anyway, so just one more clarification. So this COVID provision of 28, so we don't think we'll be reversing that very soon, right? We'll take our time to reverse that.
Yes, we will take, and we have been very, very clear, because these provisions are created on the asset book as of March 2020, and most of these assets are going to expire in 2023, by March or September 2023. Based on that, we will take a call.
Okay, after 23 ka baad.
Yeah, roughly in 23 maximum, you can assume we'll start, adjusting or reversing, only in 23, not before that.
And so last question from my side, with restructuring, we do take a 10% provision. This is not part of that COVID provision, right?
Pardon, can you tell me?
So when we restructured the book, we have to take a 10% provision.
No, that's a normal provision.
No, that's a normal provision, right? That's just clarifying.
But you need to understand, see, COVID provisions also need to be adjusted accordingly.
No, just clarifying, sir.
No. I'm just telling you, even the restructuring has got slightly more provisions also. Because what happened, if you recollect, I think in March, March 2020 quarter, we did the first COVID provision. So we increased the probability of default, both stage 1 and stage 2, and we increased the LGD percentage. Right. So even the normal case which get transferred from stage 1 to stage 2 will have a higher provision. So this is how we have adjusted the entire thing.
Sure. So, sir, thank you very much. I'll get back in the queue.
Yeah.
Thanks, Krishnendu. Zion, do you want to go ahead?
Yeah, just a follow up there. On the OPEX side of things, how should we think about second half, versus what we saw in the September quarter level? As we go, if the growth is coming back, are we hiring more people, more incentive and salary increase? So should we think about something like
cost to income ratio hasn't changed much for the company. I'm not talking about you look at quarterly. On the yearly basis, if you look at it's ranging between 22 to 23%. So that should be the range for the cost to income ratio.
Got it. Is there any ballpark figure of total OPEX growth we can think about for the full year this year and next year?
I think it could be maximum. Roughly what we have always said is between 8 to 10% is what we look at. So it in the line of income growth also. That is why if you look at last 6-7 years, the cost to income ratio has been ranging between 22-23%.
Got it. Have we delayed any salary increment, etc. because of COVID? And we might see that catch up in the second half, or we have done that already.
There was no increment in the last year, but some performance bonus, because of the COVID, people came to our office, they worked, and the collection was pretty good. So we offered a lot of benefits to the employees also. And this year it has been the normal year, in terms of, we did increase the salaries and etc. also this year.
Okay, so there's no backlog in salary increment in the second half, or this is like everything per normal?
Yes, everything. I think right now, everything is normal.
Got it. Thank you so much.
Thanks, Juan. Participants, if you have any questions, please go ahead and unmute. So if I may just slip in one question, on the competition side from banks, how is it that you're seeing on that front?
Okay. So this is not a new thing, if you look at competitive environment, I think if I have to give you answer in one line, we are not worried about it. And I would say, if you look at between 2005 to 2007, 3 large banks came into this space, but couldn't survive for more than 2-3 years. They had to shut down the business. So competition, looking at Shriram, always, a lot of people get inspired and doing. But right now, if you look at, rather than the banks, I would say some of the NBFC who are doing this business, they got converted into the small finance bank. And these are some of the NBFCs which are there in some of the pockets, But really worrying on the basically the competitive, I don't think so. Anybody has really threatened us till right now. So focus has always remains on the used commercial vehicle, which is our bread and butter. And if you look at, that is one of the reasons we have never gone beyond our strength. If you look at, we are doing commercial vehicle, but commercial vehicle has a wide range. Means any asset used for commercial purpose, we call it commercial vehicle, but it has to be moving asset, not earth moving. So if you look at, apart from railway aircraft, we lend everything, within the commercial vehicle space, and will continue. For others, some of the people who has become small finance bank, I think somehow we feel that over the time, because the consumer finance, is a short term, and the yields are much, much better right now, particularly with the consumer finance, durables, personal loan, gold loan. So commercial vehicle as such, we feel that it looks very good, when you look at the Shriram numbers. But I think it's the most difficult business in India to do, because you need to have the people on the ground. And let me tell you, a lot of people have the opinion that you acquire the talent and you'll start doing the business. That's never, because how much you can acquire, 200, 300, 400, 500. You require, it took us 40 years to create this 25,000 people. So we feel that if somebody feels that by acquiring the people, they can generate the business, it's a tough thing, You need to think beyond that, where you start creating the human capital rather than doing it. So I think these are some of the strengths what we has been very, very difficult by others banks to replicate, and particularly with the large banks, though we are absolutely not worried. And one more thing I just like to tell you, for small piece of land, loan, which is around 3 to 4 lakhs or 5 lakhs, it requires 7 to 15 days to do to wait for that, because the documents, the processing, the title of ownership, change of the vehicle, then hypothecation, then the insurance certificate transfer is a huge thing. And then the other part is that you have to make a payment to the seller, who is an individual in used vehicle. You can't make a payment like that. Is where people are afraid of doing this business in the big way. Whereas in new vehicle, which is very, very simple forms, you just need to make a payment in the names of OEM, and within 48 hours everything gets over. So that is why I think some of these people were reluctant, and that is why we feel that we have made an expertise in that direction and will continue to remain focused on it.
Sure, sir. Thank you. Nilesh has raised his hand. Nilesh, you want to go ahead?
Yeah, hi. I just wanted to clarify again the original question that was asked, on the new RBI regulations. So, again, this is based on newspaper reports that I've read, that there is a differentiation between how NBFCs upgrade accounts and banks. So, banks will upgrade an account only after principal and interest both has been normalized, versus NBFCs only if interest has been normalized, they can upgrade the account. So what is the practice at Shriram Transport, and you're saying the regulation does not have any impact on you per se?
Yes. See, Nilesh, very well put up the question. I just want to further clarify, if some people have the doubt. There is one thing called a law or the regulation when it comes. And then there is one thing called the intent of the law. So we have been following this whenever you do the upgradation from stage 3. We always felt that the entire principal and interest, which we call it DPD, has to become zero. Only then you upgrade the account. So we are following the same thing, what banks has been following. Number one. The second thing, the differentiation is that whether you do the entire exercise every quarter, but let me tell you, we are doing every month rather than every quarter also. So within the quarter also, there will be some movement which people don't capture. But once you do the monthly, you capture the entire things. The third thing, as I told you, there could be slight hiccup, which we are representing to the RBI, probably in this week, or we have already represented that we are doing monthly because of our customer segment. Like a lot of these customers where the due date is 10th, because he's an individual driver, he comes after 2 days and repays the money. So if you calculate, and they feel that, if I keep on paying every month, irrespective of the date, there is nothing pending, So I think if I calculate there could be very, very minor hit could come up. Though we don't have the exact number right now, we have already told our IT team to regenerate, because they have to change the system so that the things can come out. But for that only, there could be hiccup. Otherwise, I don't think so. Because upgrading from stage 3 to stage 1, I don't think so we have anything there. Yes, only thing is that while calculating that on the daily basis, there could be a little bit increase.
Yeah, and if that same day default rule is applied, is there some number in terms of what is the bounce rate or that for Shriram? I know a lot of your collection is in cash, but what would be the proportion of customers who do not pay on the due date that the payment is meant to be made?
There will be, if you look at this, I think it could be around, 15% or 20%, where the payments are not on the due date, but paid within the months.
Okay, thank you.
And let me tell you, the stage 2 and stage 1 within that, 0 to 31 days, and most of these customers fell in that category.
Thank you. I don't have any questions.
Yeah.
Thanks, Nilesh. Anyone else who has a question? Krishnendu, please go ahead.
Sir, just to understand on the funding part, so do we keep at our retail book at 15%, or what is the how do we just look at the liability side? Could you just explain a little bit on that?
Well, we have gone to around 17.5%, 18% right now, the retail, and we want to go to around 20-22% in next 2 years.
Okay. And just on this securitization part, the 209 billion book, how is that GNP compared to the overall GNP of 7 to 8% which we have, sir?
No, that it will be slightly lower because you do 6 months of seasoning, before you securitize, So that the performance will be much, much better.
Much better. Yeah, sure. Thank you, sir. Thank you.
Sir, Anand here. Just a quick follow-up to the, RBI rule change on asset quality. So basically for us, if the RBI doesn't accept our request for monthly, recognition, then our stage 2 will rise. That's the only thing going to happen. Whatever typically is in stage 1, some part of it, 15-20% might spill to stage 2. Otherwise, there is no other change, right? Is my understanding correct?
No, I think stage 2 won't increase to that extent. Only stage 3, we don't have that, but it could be 30, 40, 50 basis point increase could happen. That's all.
If we go to daily recognition, then stage 2 won't increase.
No, I'm talking about the stage 3 can increase, na?
Stage 3 will increase 30-40 bips, but what about stage 2?
See, let me tell you, don't take that 30-40 basis point. As I told you, we feel that this will be a very, very minor increase. What could be, once the systems gives the entire result, then only we'll be able to comment.
Sure. Fine. As just, combining the two comments you made, that 15 to 20% of the people at times pay with a delay, not on due day. So maybe my sense was maybe from stage 1, they might slip to stage 2 if we have this daily recognition approach. And hence I thought the only thing that will impact us largely is stage 2 going up, because stage 3 anyways is 90 days. That anyways is captured when we do monthly. So
no, but when you do, say for example, if you are on 60 days and if your due date is 10, if you come and pay on 13th or 14, if the RBI does not accept, that will come down in stage 3. No?
Yeah. But stage 1 to stage 2 jump seems to be much higher.
Let's come out on one part, Whether this entire thing is from stage 3 upgradation or whether stage 2, stage 1, that we are not sure right now. Okay?
Noted. Thanks, sir.
Thank you, sir. I also have one more question, which is around the new vehicle lending. When do you think that starts picking up?
If you look at the new vehicle itself, from 2018 or 19, if I don't recollect, from 1 million vehicles sold, it came down to 650,000. And definitely we see this year it's going up, but it will go up mainly because of some of the higher end of equipment vehicles, construction equipment vehicle like dumpers, tippers, and LCVs, ICB segment, because e-commerce are doing very well. But goods vehicle, if you look at within the heavy commercial vehicle, still that is lagging slightly behind, because the Excel load norms got increased where you carry 15-20% extra load, So I think it's still far away, but we feel that as and when the domestic do well, I think the new vehicle sale will further increase. But if you look at our lending, we are not in a market to do new vehicle. Only when our existing customer upgrades to new vehicle, there we are there. So for small truck owners, which got hit, and then there was a further price increase because of BS4 to BS6, and normal inflation because the commodity prices are going up in the vehicle, When they are doubly sure about that the economy, there is no disruption in the economy, then they start upgrading that. So when the things are very, very stagnant, generally these people don't. But definitely, we feel that the new vehicle disbursement should go up, but it might be after 1 quarter, not immediately.
Sure. So just to follow up to what you said about axle loading norms, don't you think the excess supply has already been absorbed in the market?
No, yes, some segment definitely, like for example, if you look at last 2 years, whatever the heavy commercial vehicle has been sold mainly on the construction equipment side, dumpers and tippers. And if you look at the LCV, which is mainly the ICV segment and the Tata Ace kind of things, which has been sold in the market. So the total number you don't see, but you need to understand from 1 million you came down to 650. Which is almost 30-35% decline from the new commercial vehicle. So as the things keeps on moving up over the time, these customers will also start upgrading that.
Sure. Okay, sir. Anyone else who has a question, please go ahead.
Sir, sorry, can I go ahead?
Yes, please.
Sir, one clarification I want this about the daily recognition of NPA is, so the quarter end dates, 31st or whichever, March and June and September, it's a point estimate. So be it what, it's a cumulative figure or whatever figure is of that date. So how will I'm just trying to understand, is it a point estimate? Why would the GNP number change even if it is daily or non-daily? It is a number on date, 31st June, 31st March. So it is on that date. So even if I do daily or 2 days, the number will still be the same. It doesn't matter.
No. Krishnendu, if you look at, say, that's what, try to understand. If the due date is 10th and if you pay on 15th, so at the month end, that will not come under NPA. Na? This will remain in stage 1, stage 2 rather than the stage 3. Na?
Sorry, could you repeat that again? Sorry, sir.
Suppose my due date is 10.
Yes, sir.
And he came and paid the money on 15th.
Oh, I see. Yeah, right. I got it. Oh, he's still not stage 3. Yeah, right.
Let me tell you one thing. I think increase in the NPA, what we are not looking so seriously, is the upgradation from stage 3 to stage 1 will take time.
Sure.
One thing I just want to tell you for all of this, if you look at our GNPA or the stage 3 asset, I think only 20, 30, 40 basis point keeps on moving every quarter. Then there are certain NBFC where 200, 300 basis point moves in the quarter. So that will take a slightly longer time to get upgraded. Because for that, you need to pay the entire 90 days overdue.
Right. I got it. Thank you very much. Thanks a lot.
Thanks, Krishnendu. Anyone else who has a question? Sure. I think then we can wind up the meeting. It's 10:48. The meeting gets automatically cut after 10 minutes. So thank you so much, Sanjay sir, and thank you all the participants for participating in the annual CITEX conference. Look forward to hosting you in the next meeting. Thank you.
Thank you very much. Thank you.
Thank you.